Peter Eliades with you for a Stock Market Cycles update for Monday, June 1st. June, where did the year go? June 1st, my goodness. Anyway, this is going to be a very short update. We don't have any fantastic projections to give you. We've given you some fantastic projections that remain outstanding, but there's nothing new popping up. So we'll take a look at this longer term picture first on the technical side, and then a quick look at projections, and that'll be it. So this is the S&P 500. The green line is the 200-day MA, 200-day moving average. Now, the general rule is that when you're below the 200-day moving average, you're either in a bear market or the negatives in a market negative. The market is in a negative configuration. Okay, if there's one thing that most people leave out of that, though, that is a very important aspect of the 200-day moving average, and that is the slant of the moving average. Is the moving average going up or is it going down? And the easy determination for that is if the current price is higher than the price of 200 days ago, the moving average goes higher. If the current price is lower than the price of 200 days ago, moving average is still going lower. So what we have done here on this chart is put a little time cycle in so you can see these red vertical lines are 200 days away. This is today and this is 200 days ago. And notice that we have like 1, 2, maybe 3, 4 weeks going on here, another month or so, down below where we are currently. Now, we could, of course, go down quickly and turn the moving average down, but you'll notice, let's zoom in on that moving average, and you'll see a very distinct picture of it slanting up all of a sudden over the last 3 or 4 days, okay? So, this is a positive configuration for the market. Doesn't mean to go out and mortgage your house and buy calls on the S&P or any other entity. It simply tells you that this is a positive configuration for the market. Now, while we say that, we should let you know that the DJIA is well below its 200-day MA. So just more confusion for you technically. But this is a positive sign on the S&P. Okay, that's point number one. Next, we're going to go to projections. And let's go to our beautiful little web charts. The web charts we get by either clicking on one of the moving averages or the close. So this is 12.1 to 13.8 day offsets. That's what? 2.5 week offsets, nominal 5-week projection. And the upper side of that projection, now again, this is the closing price projection. All right, let me extend the update for another minute because some of you have legitimately asked, when do you use closing projections and when do you use intraday? Well, we're in the intraday range now, so we would like to know what perhaps on the S&P, for example, what is the highest closing price projection we have very short term? Remember, we have projections up to new all-time highs, but that's intermediate term. I'm talking about the very short term. And this is one 2.5 week offset, 5-week projection, and it's calling for 2906.78 to 3059.02. That's the high end of this green box, 3059.02. It says right here, projection prices close. Where did the S&P close today? 3055.73. Rounded off to 3056, and we are within 3 points of the highest nominal 5-week projection on a closing basis. That's not going to give us a guarantee that prices turn down from here, but there is an excuse to turn down, at least short term. Remember, we have significantly higher projections, but we have now reached, among the shorter term projections, the ones shorter than the nominal 10-week and nominal 20-week that point to much higher prices. This is the maximum upside closing price projection. So there's an excuse now for a pullback in the market. It doesn't guarantee it. Please remember, the most important thing is that there are significantly higher projections outstanding. And with that much said, that's where we're going to drop it off today. We'll be back again tomorrow. If you haven't subscribed yet, please do so. Bottom right, click on the little red banner, ring on the bell, click on the bell. You'll be notified whenever a projection comes online. For those of you, please, if you're interested in market analysis or doing your own market work, you've got to be a subscriber to our software. The way to do that is through TradeStation. Hopefully within, I can't tell you when, but another month or two, we will have on our website available the projections to do there. But that's right now, that's a mini pipe dream. We're not within days or even a few weeks of that, okay? So that's where we stand. Thanks for watching. We'll talk to you tomorrow.